What's up, Wilson? How's it going?
Jason, man, it's yeah, man, I can't complain, just shelter in place is getting a little difficult, but we got to do what we got to do to keep everyone safe.
Exactly,
How about
exactly.
you?
Doing pretty good, just chilling and enjoying the weather. It's been sunny, so I've been running.
Nice, man. You got to
One
get
thing
out
I
there.
do know that is still going through with everyone staying home, 6 feet apart, and all that stuff. People are still refining. People are still buying homes. Um, so that's why I wanted to hit you up, so that way we can talk through some of the things that people are seeing, maybe have questions on.
Oh yeah, totally. My specialty is residential mortgages, so definitely, man, whatever. I know you got a lot of people that always ask you all these questions. So, hey, you know what? How about this? Why don't you just fire away? Then I'll answer them.
Let's do it. The first thing, man, I think a lot of people are unaware of is how forbearance works with all these people kind of losing jobs, or maybe they still have their job, but their mortgager is saying, hey, you can pay us later. Kind of run us through um, what that looks like and what people may get very shocked very soon.
Yeah, so this has been a very interesting topic, and everyone's inquiring about it. Everyone's talking about it. You see it on the media everywhere, and definitely, there's a place for it, but the reality is forbearance doesn't equal forgiveness. So, say if
Yeah.
someone can't make their mortgage payment, they they could call their servicer. Basically, the servicer is who you make the payment to. They send you your bill every single month, or you have an online login that has all that information, and you have the accounts linked up, so it's an auto payment. That's what's called the mortgage servicer. So they're the ones that determine, hey, is a forbearance allowed or not? And if you're
Mm-hmm.
in the position where, hey, you need it or you heard about it and want to inquire about it, that's who you would contact. And everyone, so what is going on is there's the CARES Act, and everything in the media is saying that, okay, if you are choosing to do a forbearance plan,
Mm-hmm.
then nothing's going to impact your credit. However, what we're seeing is, so if someone can't make the mortgage, they request a forbearance, maybe a 3-month forbearance
Yeah.
where they get to skip that payment. But guess what? Usually, if someone's in a forbearance plan and they can't make the 3 months payment, how are they going to make up all those payments and then the upcoming payment in month 4?
Yeah. So basically, like a balloon payment of those three payments.
Exactly. So that's what typically happens. And every servicer is different. Sometimes it might be a balloon, or they might tack it onto the back of the loan. Again, it just depends on the servicer, depends on your situation. But everyone is saying that, hey, because of the CARES Act, if you do choose that option, that nothing negative is going to happen. However, we're seeing firsthand where people say, like, hey, you know what? We're not going to get dinged in any way, credit wise or anything like that. They choose that. And guess
Yeah.
what? Just because it's an option, they don't need it. They just heard from the media, let's do it.
Yeah.
And then say they contact me or any other lender, they look into refi. Maybe they want to do cash out. They're stuck at home. They want to possibly work on their yard, build it out, whatever they want to do. And then when we process the application, we pull credit, it shows a derogatory event on
Ouch.
their mortgage when they were told that it wasn't going to happen.
So
So,
there's a lot of different things going out there, and that can sneak up on people very quickly and punch them in the gut.
exactly. So, my advice is if you don't need it, don't do it, and really save that forbearance plan for someone that really needs it, because like you said, it could come back and punch you in the gut when you least likely think it will. Say, like, later on down the line, you want to purchase again, you want to refinance, maybe you can't because you chose that forbearance, and guess what? Something's on your credit, even though it wasn't supposed to be. And now we have seasoning time frames. The credit score might be a lot lower, and you're going to have all these extra hurdles to jump before you're in that position to be able to get a mortgage again.
Definitely. All right. Thank you for breaking that down. I've had a lot of people ask me, and I try and kind of give it to them, but coming straight from you, you're the guy that knows about all that stuff. Couple more things
Sure.
That I know a bit about, but you are the master. So a lot of first-time home buyers will go through a couple things, but like FHA, break that down for us. Why do a lot of people do that? How does it help people, et cetera?
So there's really a couple mainstream programs out there. One of them is the FHA government program, and then might as well go into the other ones too. So the other one is a conventional program. So with a FHA, you have to have a minimum down of 3.5%, and then conventional, you have to have a minimum of 5%. However, there are some special programs out there that might allow you to do 3% down on a conventional, but it just really depends on the situation. It depends on someone's income. There are all these different special programs, and it's really figuring out which one suits the client the best. But in general terms, FHA is a little bit lower down payment. It is a little more forgiving when it comes to credit speed bumps. And maybe say, hey, for an example, someone did do forbearance, it affected their credit and the credit score, they might qualify sooner with an FHA loan versus a conventional loan.
Exactly. And then we got one more thing. We've got lovely Washington. We have the Washington bond. We've helped many buyers with this. Kind of break that down.
Absolutely. So the Washington bond, I mean, it's this huge acronym. It is the Washington State Home Finance Commission Home Advantage Down Payment Assistance Program. So, but everyone just refers to it as WABON. What that allows someone to do is, if they don't have the means currently for a down payment, that's most of the time when it's used, they can utilize that program, and the state will give you a 0 interest, no payment, second lien for that down payment. So, and it's 4%. So if you're using it with their Home Advantage FHA program, 3.5% down is the minimum, and then you have 0.5% left over that goes towards closing costs. And all you got to do is to qualify is, one, be below the income maximum, and it's actually raised in the past few years. Now the income max is $145,000.
That's up substantially.
Yeah, that went up quite a bit. It was like $97,000 before, so that's a huge increase. And you have to take a online home buyer education class, and that's it. I mean, everything else is just done like a normal loan. And, we've done them. We've helped tons of people with that program. It's a fantastic resource because renting is not always the best option, because owning, you can build wealth.
And a lot of it, that is how a normal person can become rich, when they own properties. Definitely.
Absolutely right, Jason.
Awesome, man. Thank you for answering those questions. Once again, I'm the agent. I would get people into the homes. You are the loan officer. When they find said home that they like, you get them the money to do so. We've done many deals together, and you are bar none the best loan person I've ever worked with. So I look forward to doing many more with you.
Yeah, I mean, dude, thank you so much. I appreciate it. And it's been awesome working with you. And, you always go above and beyond for all your clients. You fight for them. You negotiate on their behalf. If there's any issues, you play as a team, with myself, the lender, with escrow, with all the parties involved. So definitely, man, you really help make it a smooth process. And also by interviewing me, this is awesome because you're helping out the community. You're helping out everyone you know. You're informing them of, the potential pitfalls of forbearance, letting them know about the resources the state has for
Definitely.
people that could use a down payment assistance program. So, hey, man, thank you so much, man. I really appreciate it.
For sure. Let's do it. And like I said, with quarantine, there's still homes that we can get into, I'll say 6 feet away, and you can do everything electronically. So you can refi people, you can get people loans. Let's rock and roll, and let's help some people. I will talk to you later, my man.
All right, Jason, man. Thank you so much.
Woo!
Later.